has been a rather manic 48 hours across the board on the US financial markets, none more so than that of the Dow Jones Industrial Average. What I'll begin this afternoon's or this evening's discussion with a recap of what happened yesterday, being Wednesday's session. We did see that of a very nice type of hammer at support. You can see that we have had this green rectangular box on my screen. It has been that of a support area. I didn't actually expect this to occur as quickly as what it did, at least the intra-session retest that we saw on Wednesday. Today, however, we've seen a very nice push off from this area of support. Again, we identified this around 24,900 all the way down to 24,565. The jury's still out whether or not we're actually going to come on back down and retest this once again. However, what we saw today was a very impressive session worth of trade up, very close to 400 points. We do have another gap coming out of this support area. You can see the difference between Wednesday and Thursday. What we have done definitively is actually close the gap dating back to last week, which is fantastic. And it's really coming back to our market discussion when it comes to how these markets are actually placed compared to one another. What you can see on my screen at the moment, and really the dialogue that we have had in this public forum, but also in more depth privately, is that we are seeing a little bit of arbitrage set up on the Dow Jones Industrial Average. Hence, we've been very keen and interested on those diamond positions. If you wanted to take positions, of course, up to close the open window at 26,435, potentially right now, and this is what I'm posing to you, as at the close on Thursday, is that we may be very early on in the process of the Dow Jones Industrial Average, i.e. those diamond calls, all right, catching on up to where the SPYs, the SPXs, the S&P 500, and the NASDAQ respectively when you look at the Qs. So if I show you this on the chart, you can see that we closed at today just above 25,550, a very strong day. But really the line in the sand, so to speak, is going to be whether or not we can actually sustainably break above this, close above it, and continue above this swing high, the area that we priced in earlier in the month of March. Again, just to recap, this was a very, very, very quick retest that occurred yesterday on Wednesday. You can see, of course, this pronounced lower wick. This is what we call and identify that of a hammer at support. Generally, it is not as quick as this. However, we are seeing, again, a rather bifurcated market, or at least where the Dow Jones is in respect to where the S&P and the NASDAQ is. And I just wanted to show you this. Keep in mind, of course, that previous chart of the Dow Jones Industrial Average. What we have seen on the S&P 500, first of all, is the actual closure of this window. This is going back 1.5 weeks now, up here at 2,852. Once we hit this area, I put out a video saying that, you know, the battle of resistance has essentially begun. And if you pay close attention to the S&P 500 since, we've come on up. We've had these three sort of spinning top candlesticks, a pseudo sort of shooting star, a gap, of course, in the opposite direction. This is a reversal gap. And really, since we opened this window here, we've been toying with, of course, this support area down here, just below 2,800 down to about 2,770, as you can see on my screen. And also, of course, the open window that we've been waiting for to essentially being closed. Now, we saw the break intra-session yesterday, again, very similar to what we saw on the Dow Jones Industrial Average. Volatility as a whole is spiking. You can see this lower wick, again, resembling that of a hammer candlestick. But today being Thursday, we got that original gap to the upside, which has opened up another window, again, adding to this uncertainty, the bifurcated state of the markets. However, what we have done more or less is actually close the gap, all right, during today's session. So you can see that the Dow Jones Industrial Average, it has overshot its respective gap. We've got the S&P 500 that is still coming up to actually retest this gap. However, when you think about where we are on the chart location, we are all the way back up at its all-time high. This is taking us back to the period in late January before the waterfall sell-off in the month of February. So as we look at the S&P 500, really this is, I guess, the mid-mark between that of the industrial average and the NASDAQ. We could call it, we should say it is really the mantelpiece of our analysis. Sometimes we shift in between markets, but it is really the midpoint between that of the NASDAQ and where the Dow Jones Industrial Average is. And it's very interesting because we find ourselves between resistance, which has established itself just below 2,875, and of course, this intermediate trend line. And really the discussion has been, is this intermediate trend line going to hold? I'm just posing the question right now. Is this bottom line that I've just drawn and I'm going over in green, is this going to hold? I.e., is the support area going to hold? We got the very quick retest of that yesterday, but really at the moment, we still don't have clear direction that the S&P 500 is going to break out above its respective resistance area. Ideally, it is going to be the case, and what we can do is simply sit here and say, well, look, the markets are moving back into uniformity, and we are seeing these markets again move into that continuation of not only the primary trend, but also potentially that of an intermediate trend breakout, i.e. the trends will be working in conjunction with one another. However, and this is the big however, until we see the industrial average actually break out above its swing high earlier in the period of August and ultimately come all the way back on up and close this window, hold, and then break above roughly 26,684, these markets are still broken. And what I mean by broken is that we aren't getting true commitment, or at least intermarket confirmation, between the industrial average and the S&P 500. You can begin to see, I hope, the relationship that we are seeing more so on the minor level of the trend, i.e. some of this choppiness, which again is contributing to the volatility that we are seeing, especially over the 48 or the past 48 hours between Wednesday and of course today. This is a massive point differential between the low on Wednesday and the ultimate high on Friday. But what we've essentially done is very quickly tag support, but also at the same time close this open window to begin with. And that's really what we were looking for as we moved into this current week. So it's going to be, I assume anyway, to conclude the week, another very volatile session. If you find yourself sitting on the sidelines, I respect you tremendously for that. I know it can be hard and it does take discipline to do such a thing. But at the moment, if you understand the market structure and simply what's going on, we don't have clear direction at the moment. We haven't actually come all the way down to support for a couple of sessions and then turned, nor have we come down to support and potentially broken support. But at the same time, nor have we actually broken out above resistance. And this red or orange rectangular box on my screen is still very, very important for the S&P 500 moving forward. Now, again, going back into the NASDAQ, it was about a week ago, or a couple of days, bordering on really the transition of late last week into the very early period of this week, was where we were talking about that of a reversal. Now, as you can see, the NASDAQ, which has led these markets historically, it's not really doing so at the moment. I mean, technically it is up very close to its all-time high, but what we didn't see today was a tremendous follow-through like we saw on the S&P 500 and that of the Dow Jones Industrial Average. So again, going back into our market discussion, it looks as though the industrial average, all right, is going to play catch up to more or less currently where the NASDAQ is priced at. And if you pay attention to this chart, you can see that the movement itself was really marginal. We saw that original gap up, all right, but we traded down intra-session. We did have a positive print of 32 points, all right, that's the closing candle on Wednesday. This is the closing candle as at Thursday. But at the same time, very similar to what the S&P is doing, all right, we're still yet to break out above that definitive swing high resistance point. And it looks as though we are once again getting very close to, if not sitting back on this intermediate trend level, which really takes us back to March and April, where we really began to establish that of a series of higher lows moving forward. So again, be very cautious in the current market. It is incredibly volatile. We're seeing that with a bunch of stocks as well. Apple today broke out, whereas Amazon more or less sold off. You can see Apple breaking out above $310.31, up $3.08 again. Volatility is all over the place, so I don't blame you if you find yourself sitting on the sidelines. You can see the chart here on Amazon. It looks as though it's getting a clear rejection up at this resistance area. It did close up $3.90, but this is the second consecutive dark candlestick that we're seeing on the chart of Amazon. We saw Boeing Airlines take a very quick reversal today. This was a trade at $344.26. It did get as low yesterday as about $327. Today, however, it had a very impressive move back towards or against us anyway in this direction. What seems to be happening here is that we have, again, much like the industrial average, closed the open window, and there is probably going to be a battle on Boeing Airlines around this area. So keep an eye on that. It was a pretty impressive move. It does look like that of a sort of a morning star reversal, which is a rather bullish pattern. It did come on elevated volume as well, but you have to think about this in context of the volatility that we are seeing around the place. Baidu is acting as we assume. You can see we came down to our handle down here at 215. This is the reversal candlestick. We got the reversal candlestick also on Tuesday. I put a video out about this. Wednesday was another reversal candlestick. And this is the volatility that we're going to expect as we base around 215. We do have that of a shooting star candle today on Thursday. But overall, it looks as though the dynamic is shifting around this pivot down here. And it does open up, of course, the window or the pathway for us to move up to 245 over the coming week. So I wanted to give you an update there on Baidu. Another stock as well was Caterpillar. Caterpillar gapped down. Where did it gap down to? It gapped down to our primary level of the trend. So you can see that we've identified this level. This is the red extension on my screen. You can see this line coming up through here on an angle. We've spoken about this for a number of weeks. We tagged it yesterday on Wednesday, but you can see the very quick reversal out of this location. So what you can essentially do, if you're playing risk and reward and you're thinking about wanting to actually jump into the market, even though it is going to most likely remain rather volatile for at least the very short term future leading into next week. The trade setup, so to speak, is going to be off from this trend line, and it's going to be an entry breakout above more or less today's candle, which should and very well could take us up to 155. So if you break this down in risk and reward, it is a pretty nice risk and reward ratio. Coming off from the support area, what I would like to see would be a secondary retest of the support at 130 or 134. And then if we see that next white candlestick, that's going to be the signal to go long. That's going to work in conjunction, of course, with these oscillators turning back up as well. But you can see the beginning of what appears to be that reversal taking place and pushing back in alignment with the primary trend. So the intermediate trend has been down. However, it appears to be shifting back to the upside, which is pretty favorable as well. We had COP yesterday breaking down. Pretty long day Morobozu. This has been rather sleepy. Again, very similar to that of Boeing Airlines. Looking at this coming down to 64, even 66.87. The handbrake was pulled today, much like the market, or at least the Dow Jones Industrial Average, posting a very strong daily session, up $1.59, but we are still net negative on this position to the downside. So I'm pretty happy about COP at the moment. We'll follow along with that. We've got CVX breaking down below 118.99 as well, very close to that 115 first target on this trade. But again, at this particular time, all right, you have to be very selective in what you're looking to do. And also, when it comes to the volatility, you have to assume that it's going to be persistent. So if you can focus on a couple of trades, i.e. those diamond positions, and look for that arbitrage back up to resistance, that should really take out, or at least clean out, some of these other trades that aren't as sort of resolute in the actual trade setup itself and the strength of the trade setup. You can see Google ultimately pulling back down to this green rectangular box, very similar to Amazon. So you can see how Amazon and Google are actually negative, whereas Apple today broke out. It was up about $3.08 just earlier as we looked at it. So Google does have a little bit further to fall. I'm looking at this coming down to 1,200, and then we'll be looking to play the bounce following. We've got IBM, which is still bouncing around all over the place, up $1.43. No real trade there on IBM at the moment. And the other trade that we're looking at is Netflix at the moment. Now, I assume that Netflix is going to hold around this 330 handle, all right? And what's going to happen is very similar to Boeing Airlines and even the Google setup when it's pulling back down into resistance. All right, we're going to see that reversal set up. Resistance turned into support. This is going to be the back test of this open window, much like a bunch really of other tech companies as well. So think about that on Netflix. If I bring up the oscillators, you can see that we are relatively oversold on the MACD. The RSI is screaming oversold. And if we do get any further of a bounce, right, any continuation, you should see, a white candlestick develop relatively soon, which will take us back up to about 390. All right, maybe even up as high as 400, and then we should see potentially sell signals or sell candlesticks up here at that date. But before we get there, we obviously have to take the bounce trade as well. So keep an eye on Netflix as we move into the final session of trade for this week. And to conclude with, we've got Tesla, which is still relatively under severe pressure. It was down another $3.24 today. You can see that we're back down towards the lows of this weekly candle already. If I bring up the weekly chart, you can see for yourself we have an engulfing candlestick here, and we are very close to the lows. So the print tomorrow, being Friday, is going to be very important for Tesla. If we do see the crack of this little short-term support, this was on Wednesday, again, we're coming back down to 321, but maybe even as low as 300 to really negate or give back all of these gains that were essentially made on that short squeeze after that tweet last week as well. So I wouldn't be going or jumping in to buy Tesla at this particular time. The chart pattern is very much so broken, and it's not really helped by, of course, people fading this sort of pop that we saw during the session last week or 2 weeks ago. So on that note, everybody, that's going to do us as at this Thursday afternoon market recap. Send through any questions that you may have, success@pivotpoint-trading.com. I'll be back with you most likely tomorrow to round out this weekend's analysis. However, again, this coming Saturday, a very important class when it comes to where we find ourselves with the backdrop of the overall market indices. That is what is most important at the moment. It's not so much the relevance of individual trade setups. I do think we are more so at a very critical point as a whole on the market indices. And that's really where we've been focusing our discussion to make sense of it all. And again, if you find yourself refraining from a bunch of trades, or if you just don't want to jump in, given, of course, all of this volatility, I don't blame you for doing so. I think rather it is a rather intelligent decision, or at least just being very, very selective, i.e. Potentially with those diamond calls that we've been speaking about for a bunch of time, and just letting it, of course, work through the system and to catch up to where the SPY and the NASDAQ is currently priced at, all right, to make it up and to see these markets again move back into somewhat of a synchronicity that simply hasn't been there really over the past number of months, all right? So on that note, everybody, I'm going to say farewell to you. I'll be back in due course. Enjoy the rest of your evening. All the best, everyone. Goodbye.